Hi, I'm making a screencast video today to explain and help you complete this Excel spreadsheet. The goal is to understand about how costs and production numbers relate to revenue, profit, and economy of scale. So let's take a look at the setup. My numbers in this example will be slightly different than the ones on your spreadsheet because I want you to do your own calculations, but the process is going to be the same. So let's assume that this spreadsheet represents production and cost numbers for a pretend furniture company that manufactures, let's say, desks. And as the year progresses, they ramp up production and they increase the number of desks or units produced each month. However, we can also see the variable cost per unit actually goes down. Variable costs are those costs that increase as more units are produced. Things like the cost of factory labor or raw materials. It would go up each month. So how can this company increase the number of desks produced but reduce the variable costs per desk? Well, could be a number of ways. Perhaps they increase staff and to the perfect number of workers. Maybe they invest in better technology and new equipment to improve productivity. Maybe they increase training and specialization of labor to streamline efficiency in the production process. And because maybe they buy raw materials in bulk in larger amounts, that might be getting a better deal on the items needed, such as labor, hardware, stain, and varnish. All right, also in the setup, we can see that we have fixed costs. Fixed costs are not dependent on the amount of production. Rather, they are things like overhead, utilities, rent, mortgage payments, or perhaps the cost of office labor. And these costs are going to be the same each month. And then in this column, we see that the desks have a sale price of $150 each. Again, this ticket price is going to remain the same. So now let's crunch some numbers and fill in the table. Back to this side of the spreadsheet to get started. I'm going to take a look at the variable cost. To find the total variable cost, I'm going to be multiplying the number of units produced by the variable cost per unit. Now, I could pull out a calculator, but I don't need to do that. I'm going to let Excel do the work for me. So I'm going to click on that Home tab, and I'm going to be highlighting the cell where I want this calculation to show up, and I'm going to create a formula. And you can see I've got an example right above. Basically, I'm going to be doing the same thing, but instead of 11, it's going to say 12. So to figure out these total variable costs, I'm going to click this auto sum, the little Greek sigma up here. Now you could type this. I just like clicking that, or even the formulas tab, just to get it started so I don't have to type it. Now it's going to want to add those. I don't want to add them. I'm going to multiply them, so I'm just going to click on that 600 or cell B12. Do an asterisk symbol or Shift 8, which is the multiplication sign in Excel. I'm going to multiply that times cell C12 for the $66. And I just click enter, and it gives me the numbers. And then here's the magic. I'm going to go in the corner, and I'm going to get that skinny crisscross hovering right above that little button, and I'm going to drag that on down. That creates an automatic copy-paste feature, so I don't have to keep recreating that formula for each row. All right, now let's go ahead and take a look at the total costs, and we can add these two together. Okay, I'm going to create that formula again, and I want to add the total variable plus the total fixed. Again, when you start an automatic formula like that, it's going to want to add everything in that row. I don't want it to add everything. I just want it to add this. So I click on it, plus this, total variable plus total fixed, and enter. Go to the corner, lower right, skinny crisscross, drag on down. Okay, so we can see that yes, total variable costs does increase and create an increase in total cost as units increase in production. All right, but let's look at this next column because this is where the real magic happens. We're going to look at total cost per unit. All right, so for this, we're going to definitely see some significant trends. I'm going to be dividing the total costs by the number of units produced. So if I click on that auto sum again, just to get it started, I'm going to click on the total cost and then do a slash, which is for division. And I'm going to come back here to the units produced. So it's F12 divided by B12, and that's going to give me cost per unit. And I drag that on down. And you can see that the costs are essentially divided by higher production numbers, which, although the total costs are increasing, the cost per unit decreases. So let's see where this lands us in terms of revenue and profit. Remember, those desks are $150 each. We're going to assume, for simplicity's sake, that we sell everything we produce because these are lovely, wonderful desks and there's high demand for them. So to determine revenue, I'm going to take that $150 sale price and I'm going to multiply that by the units produced. Click on the cell where you want this formula to calculate and you want the end results to show up. Get it started. And I'm going to take the unit sale price right here, H12, do that multiplication or the asterisk sign, which is Shift 8. And it's going to be H12 times units produced all the way back over here, B12. And enter. All right, making some money. Skinny crisscross in the corner, drag down, and there we go. Let's take a look at the profit. Revenue minus total costs. Okay, start your formula. Revenue is right next here, and that is I12 minus total costs are right here in column F. So it's I12 minus F12. And there's our profit. Drag that on down. All right, so it's always the bottom line that does count, which truly reveals economy of scale. And in summary, as you can see, as production and productivity increases, the company's revenue and profit also increase, but exponentially. And basically, they're getting more bang for their buck. And that's really what economy of scale is. And this also reveals why costs are so important, because the desks are only going to sell for $150. That's the market price. But with better economy of scale, there's potentially more profit for each desk sold. So this chart also shows why small businesses can have a hard time competing against larger businesses. They can't spread out the costs as well without the higher production numbers and economy of scale. All right, well, now it's your turn. Download a copy of this file and see if you can crunch your own numbers. Then try to put some of this in your own words by answering the questions in the text boxes. Good luck.